Hello and welcome to NAIFA Live. I'm your host, Zach Hewells. We have a great panel discussion for you today. And first, we're going to kick things over to Kathleen Owings of NAIFA, Colorado with the Pledge of Allegiance. And immediately after that, you will hear from today's sponsor.
I pledge allegiance to the flag of the United States of America and to the republic for which it stands, one nation, under God, indivisible, with liberty and justice for all.
Hello, everyone, and welcome to NAIFA Live. I am Jennifer Dorfmeister, Head of Independent Distribution here at Penn Mutual. Whether you're joining us for the first time or whether you've been with us before, I know today's webinar will not disappoint. So welcome, everyone. At Penn Mutual, we proudly say no piece of business enters Penn Mutual without a financial professional involved, which is why we have invested in a large regional team to help support you at the local level. You should also know that at Penn Mutual, we are committed to our mutuality. Mutuality, it's in our DNA. You can see it in our product portfolio as a great example, which is competitive and offers a variety of solutions to meet so many of your customers' needs. Our industry-leading digital tools have also been a game changer for so many of you, with 90% of all policies coming in the door via our digital platform called ACE, of which 60% go through fluidless, which drives to at least a 90% conversion rate. That's 20 points higher than a paper application process. Now, that's the kind of tool that saves your firm both time and money. Hey, if you're interested in learning more about what we have going on at Penn Mutual, please reach out to me at dorfmeister.jennifer@pennmutual.com. Have a great day and enjoy the webinar.
Thanks, Jennifer. And thank you, Penn Mutual, for sponsoring today's episode. Now I'm going to turn things over to NAIFA CEO Kevin Mayu with some NAIFA announcements.
Hello, NAIFA Nation. Welcome to our July 2023 NAIFA Live. I want to thank our friends and supporters at Penn Mutual for providing us with the speakers for today's event. Thought leadership is what NAIFA Live is all about, and I have zero doubt that today everyone, no matter what stage of your career, is going to get a great sales idea that you can take away with you as a result of today's program. But before we begin, I'd like to talk about a few updates that are going on in the NAIFA Nation. First of all, we have officially moved in to our new headquarters at 1000 Wilson Boulevard, Suite 1890 in Arlington, Virginia. This new space provides us with an opportunity to be close to the U.S. Capitol, a new space where we can do training and events, and also a phenomenal view of the DC skyline, all while optimizing NAIFA's footprint and our operational expenditures. I also want to thank all of you that participated in last month's NAIFA Live and earned your Financial Security Advocate badge. Not only did we have a strong attendance during that activity, but we also awarded more than 240 FSA badges that are going to help prepare our members for the in-district congressional meetings that'll take place during the month of August. It's so important to get out in the field and meet with our elected representatives back not only in the U.S. Capitol, but also back home in the district. I want to thank all of you that have signed up to do the in-district meetings. And if you haven't signed up yet, there's still time to sign up. So please, if you're interested in attending and helping us move the needle on public policy, go to the members portal at members.naifa.org and find the in-district meeting sign up, which is under the Advocate tab. Fill it out, let us know you'd like to participate, and your state's grassroots chair will be in contact with you about next steps. Every NAIFA member can make a difference when it comes to public policy. Also at the congressional conference that we held in May, we kicked off a special challenge to recognize Terry Headley for his incredible service to this organization and his dedication to NAIFA PAC. And we're trying to raise $165,000 to match Terry's lifetime contributions to our PAC. The campaign is still underway, and we ask every NAIFA member out there to consider contributing today. If you're interested, go to naifa.org/advocate. All of our contributors will automatically be entered into a contest to win a $1,000 gift certificate at the conclusion of the campaign, which runs through IFAPAC's birthday on August 18th. I'm also proud to say that the beta test phase of our newly revised LUTCF designation is underway. The revised designation consists of 3 modules that are focused on ensuring that advisors have the skills and the knowledge needed to help more Americans move down the road to financial security. I want to thank all the folks that have helped us during this beta testing phase and all those that have helped us revamp this curriculum. LUTCF is coming back, and it's coming back stronger than ever. And if you'd like to reserve a spot for yourself or for someone in your firm who would benefit from this sales training, please let us know. And finally, it's also time to submit any of your nominations or an application for the NAIFA awards that we offer. Applications and nominations for the NAIFA Quality Award, the YAT Leader of the Year, our Diversity Champion, Advisor Today's 4 Under 40, all those awards are all due. Those applications are due by the end of August, as well as if you're interested in serving as a national trustee or NAIFA secretary. Again, those are due by the end of August. We're going to celebrate all of our award winners, including the winner of the John Newton Russell Memorial Award, at our National Leadership Conference that'll be held in Washington, D.C., December 3rd through the 5th. I hope you have a great remainder of your July, and we look forward to seeing you at our next NAIFA Live in August. And now it's my pleasure to introduce Howard Sharfman, Senior Managing Director with NFP Solutions and our moderator for today's panel discussion. Howard, welcome to the broadcast.
Thank you very much. And I'd like to thank everyone for investing time and being on our call today. This NAIFA Live is absolutely special. It's special to me in many ways. The first being, I have 3 very good friends on this panel. I have been in a study group with each of them, starting with my Bravo study group and my McGee study group and the Rebels. And I've learned so much from all of them. So I asked them to share their wisdom with you. I'm so proud to be able to present this, and I thank Penn Mutual for making this happen. The 3 participants we have today are Dan Munroe. I've known Dan for 25 years, and Dan has been in the insurance business for over 30 years. He is with Equitable, he is an attorney, and he is a super advisor. He helps high net worth and ultra high net worth clients around the country, and he helps them with their personal planning and corporate planning. Our second presenter is Ryan Barradas. Ryan is the founder and CEO of WealthPoint. He's been in the insurance business for over 25 years at the top of its field. He's a specialist in exit planning, complex estate planning, and all other types of sophisticated insurance planning. He's a dear friend, he's smart, and you're going to learn a tremendous amount from him. He's in Paradise Valley, Arizona. And our third presenter is Julian Movsesian. Julian is also a dear friend who I've partnered with over the years and learned a tremendous amount from. Julian is the president and founder of Succession Capital Alliance and has been deemed the creator of premium finance. He has worked with high net worth and ultra high net worth clients around the country and has led many insurance companies over the years. Julian has agreed to be with us today to share some of his wisdom, not just about premium finance, but about growing a business. Before we move to our first presenter, which is Dan, I just wanted to share one little fact. The presenting group today has created almost $500 million in target premium over the last decade. That means they've helped that many families. That means they protected that many businesses and individuals. It means we've helped people who have worked in the estate planning world and people who just wanted to pay off a mortgage. And we're very proud of all of that. And I couldn't be more proud of this panel. So Dan Munroe, can I turn it over to you, please?
Well, Howard, thank you so much for the kind introduction. Welcome everyone on behalf of all the panelists, and thank you. And I hope truly hope you get some good information from this. I wanted to start as I was thinking about what would be the most valuable sort of lessons that I've had over time. And it struck me to start with a quote from my late father, who had a plaque over his desk. And the plaque said, "We seldom fail because we don't know what to do, but because we don't do it." I'll repeat that. We seldom fail because we don't know what to do, but because we don't do it. And what I would suggest to all of you is you're going to get some really great information, hopefully from me, but certainly from Julian and Ryan. And I truly hope that you can take even a couple of these nuggets that you'll hear over the next, 45 minutes from them, and then the panel discussion, and really implement them into your practice. So I thought the best way to start my guidance or coaching or tidbits to you is just to give you a quick bit about my background to add some levity. So as Howard mentioned, I went to law school. I practiced law for several years in the Attorney General's office, and moved to an insurance company about 5 years after practicing. And I had a great run in the home office. I was general counsel. I worked in an advanced markets capacity. I ran distribution. And the last home office job I had was running product. So I was very familiar with the home office element of life insurance. So about 2009, I got a call from the CEO, which is probably never good. So I called my wife, said, "Hey, I think they're reorging. I'm probably going to lose my job. I'll try to do the best I can with a severance package." And went up, and he said, "Indeed, we are reorganizing. And I've decided, Dan, that you would be a really good agent, and this is what I want you to do." And I told him that was a terrible idea. I would be not a good agent. That is not the right path for me. And of course, being CEO, he won wasn't really a conversation, it was an edict. And that was a long time ago. And it's been an amazing run. I wanted to, impose upon you a couple of things. The first thing that I'm going to get into is when I started as an agent, I think Howard gave me this advice, is to pay more attention when people tell you the mistakes they made and don't emulate them. Listen to the mistakes and don't repeat them. Likewise, I'll tell you some of the things that I learned along the way that I think I did well, and I hope that you can follow. So in making this list, I spoke with a lot of my colleagues about, how does this hit? And so I came up with the 4 mistakes, I think, that I made that I hope that you all can avoid. And I think they came early and often the first couple of years that I was an agent. So for those of you out there that are either just starting, or even if you haven't, you've been doing this a while, I hope they resonate. So the first thing I would tell you is I've got a 26-year-old daughter, and she often talks about this thing called imposter syndrome. And imposter syndrome is, you're in a situation where you're trying to fake it. You don't really know what the hell you're doing, and you're doing the best you can, even though in your own head, you're hearing, wait, you really shouldn't be doing this. This is over your head. I shared this with someone early on, and he scratched his head and he said, the barrier to entry to selling life insurance is pretty low. And Dan, given your background, probably not the right thing to be thinking when you're talking to people that are buying big life insurance policies. And that was my experience. But I would suggest to all of you, if you're on this call, you're already better than 99% of your competition out there. Don't have imposter syndrome because clearly you care about learning. Clearly you care about your career. And it's one of the things I think that if I could give you any advice is just to get out of your own head. You're good enough to make these calls, to see these people. The second piece of advice that I implore upon you to do, especially early on, is do not go it alone. Do as much joint work as you possibly can. I told you about my background. I mean, I ran product for God's sakes. And I still, when I started, had people that I respected, like Howard, like Julian, like Ryan, come with me to meetings. Because I'll tell you, there's an old adage, you can get 100% of nothing or 50% of something. And even I look back and I think about the lessons that I learned in those joint work meetings that were simply invaluable to me. So please, please find good people and do the joint work. The next thing I would say is in terms of mistake is something that I did a lot of, I think, the first year or so. And that was avoiding risk, avoiding uncomfortable situations. And boy, that is just part of our job. There's an adage that, be comfortable being uncomfortable. And I would bet if you ask Julian, if you ask Ryan, they still are in situations that, it just may be a little bit uncomfortable for them. And I guarantee you, when they first started out, and Howard started out, and I started out, boy, some of the meetings we went to, some of the networking events we went to, they're pretty uncomfortable. And that is just part of doing this job and continuing to do it to get to the place that you want to be. Finally, I would say I wrote winging it. I guess because of my legal background, I always went into a meeting as prepared as I could be. I would have things printed out. I would play in my mind, what are the things that can go right? What are the things that can go wrong in the meeting? So I knew that I was always as prepared. There may be questions that I couldn't answer, but I had anticipated as many of them as possible. And I practiced, how will I respond to objection A or objection B? And I would just implore all of you to think through every meeting you go to do 3 or 4 or 5 times the amount of time to prepare for the meeting than the actual meeting itself. The final thing is not a mistake, but it's something I've always used and thought of, and it comes from some of the joint work that I did. So I would go in with a guy who was older, who had done this a long time, and here was his methodology. He would listen to what the prospect wanted to accomplish. He would think about it. And then he was old school. He took out his yellow legal pad and pen and said, here's how I think about it. You have 3 options. Option 1 is doing this strategy. Option 2 is doing that strategy. And option 3 is doing nothing at all. And I remember watching, because he did this a couple of times, watching the prospect having a life insurance agent saying, here are the options, 1, 2, and here's the 3rd option if you don't do anything. It was as if to say, I think you should do one of the options that I've given you for a particular reason, but there's also maybe you don't do anything, maybe you take that risk. So in crass terms, a term insurance policy. You can go with this death benefit or that death benefit, and you can do nothing at all. The pros and cons of doing nothing at all are maybe you save some money on premium that you can go buy, a TV with, but you also may risk the financial future of your family. So, those are really the options that you have. And I have found, I rarely give 100% certainties on anything, but I can tell you with 100% certainty, it will be jarring for the person you're speaking with, knowing that an insurance agent is telling you, hey, and you may not want to do anything. And you know what percentage of those people did nothing? 0. They all did something. But I think it gave a lot of credibility, the fact that you acknowledged, but you can do nothing. So please make that part of your repertoire. Finally, Howard had asked us to address some of the folks that are watching that maybe you're just starting out, maybe you're struggling, just some pieces of advice. The first thing I would say to that is that every single one of us struggled, whether it was immediately, whether it was after a couple of years. All of us have had good years and bad years. I remember multiple times within the first year that I was an agent saying, I just don't know how you make a living doing this. I don't know if I'm going to make it. I'm going to bet every one of us did it. So A, you're not alone. That's very common to have those feelings. But 2, I would tell you, with tenacity, with avoiding the mistakes that I heard, listening to Julian, listening to Ryan, you have an excellent chance of success. And let's face it, this is a career where the fallout rate is pretty high. But right now, just being on this call should tell you that you're really on the right track. And with tenacity and perseverance, you're going to make it. I would finally get into, I think, the most important part of the talk that I'm going to give, that I'm giving now. And that is Simon Sinek is an author. You all have probably listened to a speech, a TED talk, or a book or something. And I always get something out of his talks. And I think the biggest one I've ever gotten is when you're making big decisions, and heaven knows your career and how you execute against it is one of the bigger decisions you'll be making. And he always talks about always ask the why. Why are you doing this? Why are you a life insurance agent? And I can give you a firsthand testimonial from me in what it's meant. My why is that this is just the best career in the world. You get to meet absolutely amazing people from all walks of life. And man, I've met people that I've sold $100,000 term insurance policy to, that I coached Little League with. And I've sold insurance to many billionaires, $100, $200 million of insurance. And man, all of them, every one of them, and in between, I think I've helped. And if you've been doing this long enough and you have gray hair like me, unfortunately, a lot of those or some of those people to whom you've sold insurance have died. And I can't tell you enough the effect that has on you when you've done something to truly help a family, whether it's a death benefit from a term insurance policy, or really maintaining, as I'm sure Ryan will get into, a family business. Now, the income's great. And, I was laughing with my wife, Trish, this weekend as I was preparing for this. If you told me back in law school when she and I were literally on food stamps, we were so broke, and you told us what our financial lives would look like in 2023, I would have said, well, that's cool. We must have won the lottery or something, because there was no chance I could ever get to those levels. It has been such a blessing to be around my clients, many of whom are my friends, producers like Julian and Howard and Ryan, just wonderful, great people. But I'll tell you, the biggest why is the lifestyle that you can have with this. I never missed a Little League game. I never missed a sporting event. I coached a lot of youth sports for my kids. My wife and I have traveled the world doing cool things. But I'll share with you and conclude with one of the events in my life I think that I couldn't have done had I not done this job. I mentioned my daughter Katie, 26, but when she was 23, she graduated from college in 2019. She's a registered nurse and started at NYU Langone, Manhattan Hospital in February of 2020 in the ICU department. So all of you have read about these type of I call them kids because they were kids, and what COVID and the pandemic did to them. I raise this because this job and this career allowed me to go back and forth, take her at 5 a.m. She was working night shift, back home. All of them had PTSD. All of them, it was a wreck, but I was able to have the flexibility and the lifestyle that I never could have had otherwise. And honestly, I wish that for all of you. So with that, I'll throw it back to Howard. I'm really honored, Howard, again, that you asked me to join in with Julian and you and Ryan, and I'll throw it back to you. So thank you.
Well, thank you very much. And to remind everyone, there's a Q&A. Feel free to ask questions. I will get to them after all of the speakers when we're going to bring them back and ask questions, but I will be monitoring that. Dan, you had said it's what you didn't do, or your father said it's what you didn't do. Could you share something that you didn't do that you wished you did?
Yeah. Early on, Howard, I wish I had taken more chances. I wish I wasn't so took no so personally. I came from a job where I managed 100 people, so you were getting yes manned all the time. And as you know, Howard, being an agent, not everybody's going to say yes. So I wish I had simply just given myself some grace, understood this was part of the career, and understood that no and being uncomfortable is intertwined with being a life insurance agent.
Sure. And you shared one thing that you learned on an early joint work call. Could you share one more of the most important things that you learned while working with another partner?
Mm-hmm. It sounds very trite and high level, but the importance of listening and not jamming your head with your own thoughts and what you're going to say next and so forth. I found, and I've been on a lot of joint work, just like you, Julian, and Ryan have, and it's astounding to me, particularly when you go on a case with a younger agent, how they can't shut up and they don't listen to what the prospect or the client really wants.
Understood. And just 2 comments. You had talked about this business, the longevity of some of the people in the business. This business is hard. And I would like to tell everyone, a couple hundred people on this call, that's good. It's good that's hard because it, 1, makes you special. 2, it allows the pay to be what it is. And it's hard because some people don't know they need help, and it's our job to help them. And the other thing I wanted to say, based on one of your comments, was what we do is important. You had said that because we've all paid death claims. It's important. We make a difference. We change lives. We create multi-generational wealth. We help people with adversity. And everyone should be intensely proud of what we do for a living and how we help people. I know I'm very proud of it, and Dan is too, and the rest of our panelists, but I want everyone to make sure they are also. So thank you, Dan. Thank you very much. And I'd like to bring up Ryan. And Ryan, take it away.
Thank you, Howard. What I wanted to do is I wanted to go through 3 things. I'm a big numbers guy and a huge fan of 3, but 3 things that I felt like would be needle moving, and really focused on the 3 areas that I feel like are most important. And that's sales methodology and presentation. The second would be marketing, because we've got to have opportunities to showcase what it is that we do. And then more importantly, scorekeeping, because there's an old saying, winners keep score. Losers don't keep score because they don't want to know if they're winning or losing or not. And so the first thing is really our sales methodology and also presentation methodology. And I say presentation methodology because once you're done, and oftentimes we're asking people to make very large decisions, and not just because of the size of the case, a lot of the decisions that we're making are large in terms of relative nature to their income and net worth. The presentation itself is what survives you. It's what's there when you're not there to speak. And what really resonated with me, what Howard and Dan had talked about, it's not the strategies, tactics, and techniques or products that we can bring to the table. To me, those are table stakes. It's the questions we ask, and really the active listening that you do after the fact that really matters. And it's funny because I run into folks at cocktail parties, or we have dinner occasionally with clients or who have become friends, and they always comment to my wife, "Your husband is such an amazing listener." And she's like, "Are you kidding me?" But in terms of our sales process and methodology, I've always been a fan of really objectives-based selling, because our clients need a good idea, like they need a hole in the head. What they're really looking at for are solutions to specific problems. And generally, they solve big problems, not small problems. They wake up with 10 or 12 problems and time to solve one or two of them. And so just presenting good ideas, I found is a recipe to a long sales cycle and a very low close ratio. So our focus has always been to really help trap people in their own objectives, and then hold them accountable to changing strategy, structure, behavior to get where they want to go. And this is something that I've naturally evolved to in my practice, but it wasn't until I met Chuck Hollander with Red Flag about 4 years ago that I was able to see something where it really codified the sales process itself. And he said, "This is natural. You just do this naturally." But for me, it is natural, but I did not have a way to really see where I was off track, because we don't get paid on stalled deals or deals that just don't close. And so what I'm going to do is I'm going to share something with you that I might share my screen and go through what he calls the red flag compass. And this was really instrumental for me in terms of being able to not only teach this and have this be, Howard, are you seeing this? I'm not seeing, up there it goes. And be able to teach it and with the other folks in our organization, because we're a firm of multiple producers. But it's really around the psychology of human decision making. We start out where we're satisfied, we become aware of a problem, we decide whether or not we're going to fix it, and then we begin to explore options. And what I found is early on in my career, and what I see a lot of folks doing, is they're able to go in, and the first quadrant, what he refers to as quadrant run, is pinpointing a problem. And that's really identifying something that somebody wants to achieve, avoid, or fix in their life, and it's a solution that you can provide. I would find that I would pinpoint a problem, and then I'd put my Superman cape on and fly over and immediately start presenting solutions. And I hadn't really quantified whether or not this was a problem that the client really wanted to solve. And so the next stage is, once we pinpoint the problem, then we need to calculate the cost, consequence, and risk of not solving the problem, and make sure that that person is committed to moving forward and exploring options. And that's where we get past the bottom of the compass, which is, do I want to fix this or not? At that point, And only at that point do we start to contrast. And I like what Dan said. It's my solution, an alternative solution, and doing absolutely nothing at all. Because the pain of doing nothing at all has to outweigh the pain of making a big investment or going through change. Otherwise, they're not going to act. And so this has been instrumental for us in being able to codify the actual sales process. But more importantly, what ends up happening as well is that we have implemented this into our presentation format. So we'll go through and really quantify those objectives, what we call macro objectives, the things that all decisions with regards to the problems that we're addressing need to be rolled up and held accountable to. And then we go through and do the calculate. And so we'll go through their current situation and outlay line of their current situation, and then calculate the cost, consequence, and risk of not solving that problem, again, to show the pain of doing nothing or status quo. And then we move on to the presentation of the solution and then discuss next steps. It's important for us to make sure that we've got our presentations buttoned up and presented in that format. Otherwise, once we leave the room and either they're reviewing it on their own or they're reviewing it, better yet, with another advisor, it becomes then our voice that speaks after we're no longer there. The next thing I'd like to talk about is our marketing. And from a marketing perspective, we have really 3 different sources of business that we rely upon. Advisor marketing, referrals from existing clients, and then some direct marketing. And this is something that's new to us that we're embarking on now that we really haven't got a lot of direct results out of. But advisor marketing is what we built our entire firm, our career around, really being the advisor's marketing, the advisor's advisor when it comes to life insurance. And what we do is we market to CPAs, generally wealth managers and attorneys. Those are our 3 main sources of business. And I would say wealth managers and attorneys are our primary source of business and folks that serve the people that we serve. But what we've done is really break this down into a system. And the system is rating advisors A, B, and C, which is it's not rocket science, and a lot of people do this, but then really having a firm definition for what is an A advisor. So an A advisor for us is somebody that is referable themselves. They have, because I want to be able to direct other advisors to them or potentially a client to them. They serve many clients, not just a few clients, but many clients that I'm targeting. So we have a common client base or database that we're seeking to serve. They're not covetous of their close relationships. So some advisors are very, very protective of their close relationships. They tend to not want to refer outward. The fourth is that they've discussed a fact pattern with us in the last 12 to 18 months. That's important because advisors also can be China eggs. They look really pretty and you think they might refer you business. But if they haven't discussed an active client fact pattern with us in the last 12 to 18 months, then we need to move on and spend our time elsewhere. And the last is, do they have the capacity for close relationships? This is important because when we're working with professional service advisors, if they have the capacity to have a good working relationship, a close relationship, in some ways, a personal relationship or friendship with us, then they're really going to have that same relationship or the capacity to have that relationship with their client. And that carries clout. And clout is important because you want the client to be able to take advice from them just based on the fact that the advisor is recommending either a product or service, or us in particular, to them as a solution or potential solution to their problem. The other thing is that we've broken things up. It's a little weird. I know everybody operates on quarters, and we thought that maybe it was unique to the Phoenix metro area, but now we've got offices in several cities around the country. We've broken things up into trimesters as opposed to quarters. And a lot of that had to do with, the first 4 months of the year, the middle 4 months of the year, and the last 4 months of the year. And what we aim to do with our A advisors is see them at least twice in a trimester. And we want to do one technical discussion where we're talking about an active, a case study or a potential solution, and educate them in some way, shape, or form. And the second is the targeted social touch or social contact, because we want to build that relationship. And so that could be a baseball game or other sports game. It could be a round of golf. It could just be happy hour or dinner. But I want a social interaction with them to make sure that I'm building that relationship and I'm staying top of mind. We do other things to touch them. A lot of times I'll just send a random note or text, just letting them know I'm thinking about them, or forward an email that I think is important, but I want to do that on a regular basis. And then we keep track, which is the next thing that I'm going to talk about, is our scorekeeping. We keep track of what it is that we're doing with those advisors on a regular basis. But our goal is to get as many discussions of fact patterns as we possibly can, which then turn into opportunities, which then turn into an open case, and we have a very, very high close ratio. Referrals is something that I wish I did better. And I can talk a little bit about that maybe later if we have time. But that's most of the referrals that we get at this point are referrals that are just spontaneous referrals. The last thing that I'll talk about is our scorekeeping, because again, winners keep score, losers don't keep score, because they don't want to see if they're winning or losing or not. And there's a few things. If number one, if it's worth doing, it's worth measuring. And what we want to do is measure the things that are most important to us. And we went through the traction process, which is Gino Wickman's process called EOS. And we've been implementing and instituting traction within our business for a long time, or EOS within our business for quite a while. And if you ever get a chance, read the book Traction. It's really a game changer. But the scorecard in particular is something that the way Gino describes it is, if you were on an island and you had just a few pieces of information, what are those crucial pieces of information that would tell you whether or not the business was on track or off track? And that's all you would need, are those pieces of information. And so what I'm going to do is I'm going to share our scorecard with you so you can see an example of this. If I can get it to change here. And this is my scorecard in particular. It's going to pop up here in a second. This is my scorecard, and then I'll go to the company scorecard. But each month, this is through June of 2023, I've got my A advisor meetings, and I was woefully behind. I have a goal of 4 per month, and I only had 1. I had some travel. We had our Pack Life trip and some other things in June that prevented me from being as active as I wanted to. My pipeline is usually double what my revenue goal is. So my pipeline that I look for me personally, is 8 million. I'm at 6.4 million. So I'm $1.5 million behind. And we have all these conditional formatted. So if I'm more than 10% off goal, it's red. If it's within 10%, it's yellow. And if I'm at or over goal, it's green. This is our weighted pipeline. So this is based on where things are at in the process in terms of likelihood of close. revenue in the next 30 days of what we have projected to come in, revenue in the next 90 days. Leads or fact patterns, which are really important, and you heard me talk about that earlier. And then opportunities that are created, new opportunities that are created. And then where am I at year to date in terms of total revenue? And then we have the exact same thing for the company. So everybody, and we measure where everybody's at on a year to date basis based on what our goals are. But this is really important. It's important for us, but I think it's important for everybody. And you can't fix or improve something that you can't see or measure. And that's something that, it was a quote from Admiral Smith that works with Chuck Hollander that really resonated with me, because I believe it in my bones. But it's something that I think that everybody should really be paying attention to, is identifying those things that are your critical success factors and then measuring them on a regular basis. I used to have and then I'm going to tell this story, but I had a mentor of mine very early on in the business. I started out with New York Life, and he said a very, very simple quote to me. He said, Ryan, actually Rhino, because that's my nickname. He said, Rhino, the choice is simple: work or worry. And I wrote that on a piece of paper, and I put it up on my desk right behind my telephone. And that's something that I've adhered to and lived by ever since. So Howard, I'll turn it back over to you.
Thank you, Ryan. That was exceptional. Work or worry. I like that. Rhino, you had spoken about questions and asking questions a little bit. What's your favorite question or two that you ask a client?
My all-time favorite question is the Dan Sullivan R Factor question. If we were sitting here 12 months from today, what would have to have happened in your life in order for you, or whatever it may be, in order for you to be happy with the results? And then ask them what's prevented them from getting there in the past.
Excellent. Let me share for a moment. One of my favorite questions is, how long would you like this process to take? We ask advisors that, we ask clients that, and we ask them that because, one, we need to know that, and two, it gives us permission to follow up and not feel bad about it if they are off track, because we want people to be on track, not off track. You spoke about your new client marketing initiatives and referrals. You said, one, you're not that good at, which probably doubt, and two, you don't ask for enough of them. So tell me how you do get clients, besides the process of getting clients, besides working with an advisor and someone calling you with a question like, I have a guy or I have a gal that I want you to talk to.
Most of them are spontaneous referrals through clients or advisors. So we do such a great job for our clients that if things come up at a cocktail party, we tend to get mentioned. And then also our focus is getting in business from professional advisors. The thing that I wish that I would do better, even to this day, not going back further, is actively asking for referrals, because people genuinely want to help other people. And what stops me, my own head trash that stops me from doing that, is the fact that when we get referred in by a professional advisor, it's a just-in-time referral. It's somebody that's either actively looking to buy insurance, evaluating an existing portfolio, or is in a process of doing planning that will require a product. When we ask for referrals, and if I get 3 referrals from you, Howard, and I call on those people, generally there's going to be 1 out of 3 on average that's going to be ready to potentially do business now, and the other 2 I've got to drip on. And it just seems I find it less efficient. The difference is with the advisor referrals, I don't know when they're going to come. I know they're going to come, but I don't know from who or when or whatever. And the client referral system is something that's a faucet I can turn off and on whenever I want to. I can go and approach those clients. I can be very targeted with my ask and with the people that I'm asking. And so it's something, it's a trade-off that I've got to get out of my own way and ignore my own head trash and do it. Just do it.
Got it. And then just in closing, what would you do differently if you got to start over and do it again?
I would start doing advisor marketing a lot sooner. I think I started doing it and didn't get a lot of referrals, and then I stopped. And it's a long game. You have to build up a lot of trust. And the sooner you get started and you create a system around it, the sooner that you're going to end up getting proactive referrals from professional advisors. There's not a lot that I regret, but that's the one thing, because I've taken a lot of chances, invested in myself and in my business. But that would have been something that I would have done differently, for sure.
Excellent. Ryan, thank you so much for sharing with us today. I'll ask you to come back on after Julian joins us. So Julian, could you jump on screen? And
Jules, I did my damnedest to try to
everything.
take all your time.
I'm going to turn it over to Julian. So thank you for being with us, Julian.
Well, good afternoon, Howard, and thanks for having me, and thanks for NAIFA for inviting us. And I also want to thank my friends at Penn Mutual for sponsoring it. I'm not sure if most of you guys know my background or not, but when I joined the life insurance industry, my first major company was Connecticut Mutual, which later on merged the Mass Mutual. And when I applied with Connecticut Mutual, they promised me they were going to pay me to start $2,000 a month. It used to be called the Training Allowance Program for career agents. So after I quit my job and I joined Connecticut Mutual, they told me that they can't pay me because I failed the aptitude test. So I had no choice but to go out and work my butt off. I remember in my first year with Connecticut Mutual, this was all pretty much cold calling. I placed 117 policies. Average premium was around $1,100 to $1,200 a year. And in '88, I was the Rookie of the Year for Connecticut Mutual. So fast forward, my practices start growing in the West LA, Beverly Hills area. And in 1995, I was very blessed when I was introduced to a very prominent family, and we were about to place $40 million policy on mom. Dad passed away, and mom at that time, she was 73, 74 years old. And that was what we call our first big, large case in my career. We're talking about, again, back then, $800,000 was large premiums. Even today, it's large premium. Make the story short, I'm driving to the third and final meeting, and we sit down in the family conference room, and the son-in-law is the trustee and is also an attorney. Here is what he told me. First, he said, I know the insurance company is a good company. I know the policy is a great policy. However, my problem is writing $800,000 check every year to the insurance company because it's after tax dollars. So as I went to a career school in Hartford, Connecticut, with Connecticut Mutual, and what we were trained to say, obviously, well, the entire $40 million, it's an income and estate tax-free. Mom is not going to make it to 94. That's beyond her life expectancy. Here is what the client said to me. He said, listen, when I buy a $100 million building, I don't write a $100 million check. Find me a bank to lend me the money. That's how the entire premium finance in the estate planning world started, from that one client. Again, just for the sake of time, so that case that we landed, that was in 1995. And then I partnered up. AIG were my lender, and our practice kept growing. And then in 2003, AIG approached me and they said, since Ryan mentioned and Dan joint work, AIG said a lot of agents, they need help and joint work when it comes to premium financing for the ultra high net worth market. So we started a company, Succession Capital Alliance, and it was a 50-50 partnership. And the company started, like I said, we started the company in 2003. So the whole model it was a joint work around advanced estate planning, business succession planning, and 90% of our business was done through premium financing, and AIG were our exclusive lender. And we had a great run until, of course, 2008 when we had the crisis, and AIG, they were trying to sell a lot of their assets, so they sold their share. And what we did, we bought our 50% of our company back, 100% of our company back from AIG. So today, Succession Capital is no longer part of AIG, so we own it outright. And our model is pretty much, it's all about joint work with advisors nationwide. And we partner up with carriers and a lot of different groups. And when we talk about marketing, Howard, obviously, one of the things that we have done is we have these large conferences that we host in California and Las Vegas that sponsored exclusively, like by Penn Mutual, John Hancock, Pacific Life, and Nationwide, and so forth. It's an invitation-only conference, but again, it's all about education and advanced estate planning and premium financing strategies and so forth. So today, our firm, as you all, or Howard, you're aware of this, that we service over 50 billion of in-force life insurance, all right? And that's our number one priority, always servicing clients. And even though a lot of people might say premium financing doesn't work in the high interest rate environment, we've been through this in 2001 and 2007. So we know how we're able to service this client. We create a lot of safety nets because, again, we don't want the client to be in a bind. So we're very, very proud of what we've done. And one of the things I've decided a year and a half ago, right after COVID, a lot of firms were laying off people or cutting down on their staff. We decided to expand. And one of the things we've decided to do first, again, us life agents, we're not great administrators. So I was told to hire a good COO. So we hired a recruiting company to find me a good COO. So we hired an individual. She's extremely highly qualified. She ran one of the largest PNC wholesale firms in the country. So we made her a great offer. She couldn't refuse to come here in Newport Beach. And so now she is our COO. And then what we decided to do, and the carriers keep asking me, is that we need more boots on the ground. However, we wanted to hire individuals that they are very disciplined, athletic, good education. So we went out and we hired kids from Ivy League schools that they played sports and they had zero life insurance experience. So today we have boots on the ground all over the US, obviously, and the carriers, they support us for this. And because again, me or my partner, we just can't handle all the volume. So our junior partners, they're out there obviously to help younger agents or new agents that are coming into the business. And of course, my job as the CEO, I'm still very active. I love to meet clients and obviously new prospects. One advice I will give to everyone is this. Obviously, everyone has a different style, but when I'm meeting with a client, I do a lot of fact finding. And I want to make sure my team, they're prepared, all the background on the client and so forth. No matter how good the product is or how good premium financing the program is, the client's got to have a need to buy the policy, if it's estate planning, retirement, or business succession planning. Having said that, I'm very relaxed with the clients, very calm. And one of the things I always tell the clients, because again, if it doesn't matter if the client is paying cash or being financed, we're always giving him those both options. But one thing is I always tell the client, especially if we're doing high-end estate planning, and these premiums are extremely large, do you have to be comfortable with the cash flow, right? So if the premiums are $1 million a year, for example, or the interest payments are, say, $60,000 a year, we tell the clients, yes, you got to be comfortable with the cash flow, because you got to take care of yourself first before the next generation. And one of the famous lines I've learned from one of my friends that I work with, he always tells me, if you don't fly first class, your kids will. So I tell this to the prospects that I'm presenting, Howard. I tell them you have to be comfortable with the cash flow, because if you don't fly first class, your kids will. So I try to make the clients very comfortable, and usually our closing percentage on every time we meet a client, it's greater than 90%. That's the advice I will give to our colleagues here on this meeting. I'm done.
Julian, thank you so much. And you sit in a very unique space in which you see so many agents and advisors that you do joint work with. Tell me the things they do right. Give me 2 things that they do right, that they do incredibly well, and tell me 2 things that they really stink at that you wish they did differently. And I think everyone on this call would learn from that.
Let me tell you about the 2 things they do wrong first. All right. And I've learned this, and because with me and our firm, we work with hundreds and hundreds of agents over the years. First, that doesn't mean the client is worth $100 million. He's going to need to buy 50 or 60 or $80 million policy. That's one thing I've learned. A lot of agents try to oversell, right? That's number one. Number two is they don't give the client 2 options when they present a large policy. In other words, if the premiums are $500,000, they're only giving them 1 option. One thing we've done that, this, I've started since 1996, the whole idea was giving the client the 2 options. One, paying cash, that's always option 1, always, right? So if the client is willing to write the $500,000 premiums, you don't talk them out of it to go to finance the premium. You take the $500,000. But this as well as I do, not every client's going to write that $500,000 check in the first or second meeting. But if you give the client 2 options, either cash or leverage, at least now the client had his decision. He will make a quicker decision, in my opinion, rather than giving him 1 option. All right. So that's the 2 mistakes I've seen agents do, is when they give the clients 1 option, the client then might get cold feet, or he decides not to move forward. Then they'll come back with premium financing. In my opinion, you got to give the 2 options in the same meeting or in the final meeting when you meet with the clients.
Got it. Okay. And what do they do well? What do you say sometimes, like, wow, I would have never thought about that, but it worked out?
Well, like I've learned, again, which groups we all belong to, and I've learned from our study group, at least the running rebels, is the asking a lot of the questions and about the fact finding. So I've seen the smart agent, he asks a lot of questions before he goes to how are you going to design the estate plan or the policy. So fact finding, in my opinion, it's very important. And I've seen a lot of agents, they do proper fact finding, and I love that. On the other hand, I've seen some agents, again, they just shoot in the dark, which again, I don't agree with that. The other thing that I've seen, and I've learned this from you, Howard, I got to give you credit. You talk slow. All right. I'm a fast talker. I like to keep going, but I've learned this from you. You talk very, very slow and clear. So I've learned how to do this in the last few years since we've been in our study group. So I give you that credit.
Thank you very much.
Plus, you're a handsome guy on top of it.
Don't have very good hair, but yes, thank you. Julian, I want to talk about lifestyle marketing for a moment. You're out and about, you do some fun things, you're meeting people all the time. How do you build the bridge between meeting someone at a soccer game or a Raiders game and seeing if they want to do business with you? How do you float those bubbles? How do you do that while still not pissing off your spouse and having her say, "Stop it, Julian, we're here socially"?
I'll give you this example. We were actually at the New England and Raiders game last year when the New England lost in the last 30 seconds in Las Vegas. And I had guests with me, all right, and my wife was there. There's some other guests there. And actually, my wife got upset at me because I wasn't paying attention to the game or to her in the beginning, in the first half, because the person that was sitting in the box behind me was a CEO of a major company. And he started asking me questions, and we got into the dialogue of deferred compensation and estate planning. And the entire half, while we were drinking a little scotch, we were talking about pretty much life insurance. And my wife got a little upset about that. However, one thing I've learned, and I've learned this a long time ago, I've learned how to surround myself, including in my firm now, how to surround myself or hire people that even are smarter than me. All right. So that's one thing I've done right. And I like to hang around successful people and smart people. All right. Because if I'm hanging around losers, I'm going to end up being a loser. So I'd rather hang around successful people. There's nothing wrong, again, with guys that are making lower income. That doesn't mean they're losers. As long as they work hard, they're successful in my book. Because keep in mind, my first job, Howard, I think you know this. You remember why I got fired for?
Tell everyone.
All right. My first job at McDonald's, the reason I got fired for, and I was 20 years old or 19, because after you clean up the store at night and you take count of the burgers, you throw them away in the trash. After we closed the store, I went to the trash can to grab 2 burgers to take home for my dinner. The manager was getting in his car and he asked me what I'm doing there. I said, I'm just taking a couple of burgers to go home to eat my dinner. I got fired the next day because of that. So again, I'm not embarrassed to say that, because guess what? I can buy 100 McDonald's today. All right. However, I respect people that work hard. That doesn't mean you have to make money to be successful. You can make $50,000 a year. And as long as you're working, you have my respect for that.
Great. Excellent. I think you do the things that other people don't want to do. And I've watched Julian do that throughout his career. I remember when I started my career, I used to work in Fulton Market in Chicago at the meatpacking district, since Julian mentioned hamburgers. And I'd go down there at 4:30 or 5 in the morning with their loading trucks and things like that. And I'd go and try to meet with the people who own the companies. But I'd see they were loading or unloading trucks. So I'd take off my jacket and I'd go and load some trucks, and I'd go unload the trucks. And the owner would say, "What are you doing?" I said, "Well, I'm loading trucks right now, but afterwards I'm talking to you about your financial planning and your insurance." And you do the things that other people don't want to do, which will help you be successful. The other thing that everyone on this call, and I'm going to ask everyone to come back online, what everyone on this call does is they do it right. Everyone on this call has had the opportunity to make a significant amount of money by making bad choices. There were strange financing out there. There were bad transactions where they changed beneficial interest, whatever it was. And they didn't. And I've seen all of them work. And that's something they should be so proud of, and everyone has to do. Play the long game. There's success in this business, and if you play the long game and do it right, then you will be successful. So thank you, everyone. Thank you, Dan. Thank you, Ron. Thank you, Julian, for sharing that. We have some questions from the audience, and the first one's actually a premium finance question. There's a premium finance question about premium finance in the non-ultra high net worth market, and they mentioned a program out there called Kaizen. And what do you think about the market for premium finance? Where is it a no-go? Where is it a go? And what type of net worth or situation do they need to be in, Julian?
The first thing I will say about for clients that going to do premium financing, and let's just take the example of a client wants to buy a $20 million or $10 million policy, and the annual premium say it's $200,000 a year. In my book, if the client cannot afford to pay the premiums in cash, then it's not the right prospect for premium financing. Because I need to remind everyone, premium financing is not for clients that are broke or poor or don't have the net worth. It's the other way around. A bank is not going to lend you money if you're broke. The bank is going to lend you money if you're well off. Having said that, what was the other part of the question, Howard? I heard about something about Kaizen.
Yeah, well, what type of net worth? If someone is, I guess, a Henry, high income, not yet rich, is a premium finance program a reasonable option for them, or should they try some other solution until they get to a place where they should be comfortable financing things?
Okay, like again, I know our sponsor Penn Mutual has a requirement of 15 million net worth minimum requirement. I know some of the carriers, they up the requirements of 10 million. Having said that, you have a lot of young professionals today. They have the good income, strong income, 700,000-800,000 a year or higher, but they don't have that net worth yet, right? So you have to design the product properly. First of all, you got to build safety nets for the client. Second, I can convince the carrier, okay, the guy doesn't have the 10 million net worth. However, he's only 34 years old and he's already making $700,000-800,000 a year. So that is a good prospect. But when you have a client that's net worth is 3 million or 2 million, and the client on part of it, 90% of it is hard asset, and his income is only a couple $100,000 a year, that's not a good client for premium financing, because sooner or later it's going to backfire. Having said that, I am very familiar with the Kaizen program. There's nothing wrong with that. But that's assuming, and maybe Ryan can comment on it or Dan, but that's assuming the S&P or the market is going to average at least 6% or greater. And you also got to assume the borrowing rate's always going to be below the crediting rate. Well, that's not always the case. Well, look what's happening today or in the last few years. Borrowing rates going up and the crediting rates in the IUL policies have dropped. So do I believe in that program? I personally would not get near it. But again, that's my opinion. All right. But I would love to hear what Ryan or Dan have to say about that. Rhino?
I agree with you 100%. They've got to be able to, they've got to have the financial wherewithal to buy the insurance themselves. I think that I hate to say anything negative about anybody else or another program, but I am not a fan of Kaizen. I think it's built on a mountain. You know, all premium finance presentations are built on a mountain of assumptions, and if you just stress one or two of the assumptions a little bit, it's like a house of cards, and it just all falls down. And the client's really left holding the bag. And then people like myself or Dan or Julian get called in to try to fix something that's really, in some cases, is not fixable. It's just, it was sold the wrong way to begin with. So.
Great.
My only comment, Howard, is when you told me when we were talking about premium financing years ago, you want to make sure, and I know Julian and Ryan do this, you want to make sure the client knows the assumptions and the client knows, the client is aware that if any of these assumptions don't work out, what the affect of that will be. And that's something Julian and Ryan are phenomenal with.
don't be afraid to give clients or prospects bad news,
Bad news.
because that's reality in some situations. Have them understand the downside, and then we can enjoy the upside. Leverage works amazingly well when it works. When it doesn't work and you're not prepared, there's significant issues. To all of you, there's been a couple questions that's come in about how do you market and prospect to new clients. Ryan, you answered that a little bit, but Dan, could you talk about how you market to new clients? I think you'd be closest to that.
Yeah, to new clients. So look, we've all been doing this a while. A lot of my newer clients come from referrals and professional referrals. I have big inroads with the CPA and attorney communities, just because you go where your strength is, and I have a law degree. I've just simply found there's no better strategy than the things that Julian and Ryan talked about, particularly early on. Julian talked about cold calling, but then when you have the ability to be social with people who might have an insurance need, I'm not obnoxious about it. And Julian, I'm a big Patriots fan, so thank you for bringing up that game. But I think, Howard, the number one thing that I probably should have mentioned in my remarks was networking when you're younger. Don't be afraid. And I've done some really goofy networking events, or have gone to them, but you just can't do enough of that as a younger advisor.
Right.
You have two Raider fans on the call, not just one.
Just so everyone knows, it is possible to become incredibly connected within your market in a short period of time. I watched a new president of a significant bank come to Chicago, not knowing anyone. And he had a marketing plan to meet the top advisors in the ultra high net worth space. And he spent the next year meeting them. He had a plan of action. He called, he got referrals, he used LinkedIn, he used Google, he figured things out. They had some events, not incredibly fancy, expensive events, but interesting events and brought value. At the end of that year, he was more connected than someone who grew up in the city and lived there their whole life, has been working in the profession for a decade or two, because it was their job to be connected in that marketplace. It can be done as long as, one, you've done your training, so you can add value in that market. You are expert at what you do. And two, you make it your job to do that. Now, we all have another job. The other job is to bring in revenue for our family and support our family and to help clients. So we have to do those two jobs simultaneously, but it's worth doing, I would say. Let's talk about LinkedIn or WealthX and using that to prime the pump for referrals. Does anyone go on a prospect or client's LinkedIn and look at their network and then recommend someone or ask for a referral? So if I'm on Dan's network and Ryan is there and I say, I've been really trying to meet Ryan, can you help me with an introduction? Has anyone ever done that, and has it worked?
I would love to speak to that. That's one of the things that we go in with a loaded list approach if we ask for referrals, and that's going to be maybe our top 25 prospects. And what we do is use all sources of social media and other, because we want to build a relationship map and find out what associations do they belong to, the country club, their advisors, their good friends. I want to find out what points of contact that I can get in where I can potentially get referred, because I'm horrible at cold calling. I'm not a good social prospector. I like other people recommending me. Like the question that you asked of Julian, that would be very difficult for me unless it fell into my lap. I usually get up from the table at the club and people go, "What does Rhino do?" Because I'm afraid to talk about what I do. I want to be myself and have other people recommend me. But that's something that we often do, is use the various forms of social media and other platforms in order to build a map around that person, so we can get a targeted entry point or 2 or 3. The more people that we get referred in, especially with ultra affluent, if they hear your name from 3 or 4 different people, the better off you are.
Excellent. And everyone's different. And Ryan just said that's not who he is. What I would say, that is who I am. One of the things that makes me me is my intersection of my personal and professional life, because I would truly love what I do. That doesn't make me right and Ryan wrong. It just means you have to know your skill set. I know when I walk into a party, I'm not going to find the 3 or 4 or 10 great prospects in there. That's not me when it was one of my partners. But I do know when I walk into a room of advisors, I could add value and I find people. So you have to understand your market and do a lot of self-evaluation. I think that's really important. There's a question here that says, what if your company doesn't allow premium finance? That's a hard one, but there's been 99% of the agents in the country who have made a living and have helped clients without premium finance. So I don't think you should think that is a stumbling block, but I think it's reasonable to ask why. And if you have the right client and you ask the right, you make the right sales pitch to your company, I imagine they might help. They might agree with that, but it better be the right client. The last question I have here is, life insurance is still perceived with skepticism by many. Why is that? And how do you handle the doubts behind it? And Dan, could you start and talk about that? And then I'll go to Ryan, Julian, I'll finish up, and we're going to thank you all at that point.
I think the comment comes from it, and it's so pervasive, I think, in today's society, that Aunt Ruth at a Thanksgiving Day dinner said that she heard from Aunt Shirley, who heard from a neighbor, that they got screwed from a life insurance company. I think when I've been approached about that, I just simply do what Howard and Julian and Ryan do and say, well, why do you think that? What makes you say that? And their comment is usually because Aunt Ruth said, that Aunt Cheryl said, that a neighbor said. And I don't even respond to that. I just nod my head, because it's such an asinine thing to say, where they think they read something. So I think the way that I address it is just by, like these guys are doing, phenomenal fact finding, and oftentimes the answer, you can politely smirk and say, so that's what you think too.
Ryan?
Yeah, I echo what Dan said. I mean, there are good attorneys and bad attorneys. There are good dentists and bad dentists. And I think a lot of it has to do with the compensation structure of the product. You've got heaped commissions and very, very low renewals and trails. And so generally it goes back to this, you've invented an industry of hunters, not service people. And the products go unwatched and unmaintained over a long period of time, and small problems turn into big problems. And so it's really comes back to the folks that are actually servicing or selling and potentially not servicing the product.
And Julian?
You know, I tell you, what Dan said reminded me when I was at a big party for, I support a lot of charities. One of them is Big Brothers Big Sisters. And one of the board members came to me, he goes, Julian, you know, I know you're in the life business and you've been doing it for a long time, but my agent sold me this piece, excuse my language, piece of crap policy. My policy is going to lapse at the age of 83. It's gone after paying all these premiums. I go, that doesn't sound right. All right. So what I did, I asked them for some information. All right. And what we did, we asked for the premium history of the policy. Well, guess what? The guys kept premium for at least 9 years. He didn't pay premiums because his agent told him you are fine by not paying the premiums. Well, yeah, when the crediting rates drops, what happens then to the policy, right? The policy is going to collapse much sooner. So, you know what? I called them. I said, you have a great policy, but here is the problem. You did not pay premiums for 9 years. Well, the agent told me not to pay it. I go, maybe he told you for 1 year or 2 years, but not for 9. All right. So I tell everyone, life policies, it's a great asset to have if you have the need for it.
Absolutely. We do something that no one else does. Our products are unique. Our products are special and they're magical in the right situation. We also make sure that everything else you do works. It's a unique business and you should be incredibly proud to be in it. What I would say is everyone do the right thing. Doing simple things make you special, like showing up on time, like saying please and thank you, like going above what is expected. And the blue ocean in our industry is service. We all have similar products to sell. We all bring smart people to the table. There's differences in everyone's firms, but what the biggest difference is how you treat people post-close, how you treat people in service. We have an active product that we need to be serviced, and you should be very proud of doing that. It gives you an opportunity to know your client better, to make friends, to get referrals, to help people. And LIMRA tells us that people buy insurance 7 times in their life. And who do you think they're going to buy it from? So I think that's what I'm going to close on. Service is intensely important. You need to have a best practice and a roadmap to your service. You need to get the client on board and everyone agreed to what type of service you're going to provide. And then you need to do what you say you're going to do. And when you do that, there will be so many people who are wanting to do business with you. Life's going to be a lot easier. So Julian, Ryan, Dan, thank you so much for your time today. For everyone on the call, thank you so much for investing your time in what you do for this industry. Please remember to take the NAIFA survey. Tell them how much you like your moderator, and I look forward to our next NAIFA Live call. Thank you very much. Have a great day.
Thank you, guys. Thank you, Howie. Have a good day, everyone.